Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG. Thought we would come to you today briefly with kind of a market update, let you know what's going on out there. As I speak, the S&P 500 is right at about 4,360. We've been in this sort of 4,300 to 4,400 range since about June 12th. And that seems to be where the market has kind of settled in around post some of the inflation numbers and Fed decision that came out in early June. So market seems to like that kind of range. It's kind of quiet right now. On the economic data front, yesterday we got a couple of good pieces of information. First off, consumer confidence came in at a reading of 109.7, which is the highest it has been since January of 22. So consumers feeling good out there and better than they have in the past year and a half, which is generally positive for economic news. You know, when consumers feel good, they spend money, which is a good thing. Second piece of good data that came out was around housing sales. So we saw a boost in housing sales well above expectations, which is once again a good indicator that consumers are actually feeling good. If we're spending more on housing, if we're buying more houses, houses are generally not purchases that you make if you're scared about the state of the economy. And there was a lot of market chatter around, well, this basically means that a recession is off the table, which caused a pretty significant rally yesterday in the market. But once again, still sort of range bound between 4,300 and 4,400 as a level. The thing that I would just sort of caution is, we continue down this sort of knife edge path, as we've talked about before, of we don't want the economy to be too weak because we don't want to slide off into recession. But we also don't want the economy to be too strong, believe it or not, because we still need to get that stubbornly high inflation under control. You know, when I look back at the last month's inflation report, we are still high versus where the Fed would like to be. We are still above that Fed target. So don't get me wrong. I'm not one of these, good news is bad news individuals. It is certainly a good thing that consumers feel good and that housing sales indicate a little bit of strength on that end. But I would just also caution that, we still need to get inflation under control. And so I think in the back of the market's mind, there is certainly this narrative of, okay, we want strong, but we don't want too strong because the Fed continues to need to bring inflation down. And indeed, Powell, in his most recent comments, sort of indicated that, while they took a pause at the last meeting, they'll probably hike once or twice more this year based on the strength of the economy. And it's good news to see that play out, but I just would warn everybody that, as we look at the playbook of the major media markets, from here to the end of the year, I think we'll continue to see that sort of flip-flop between, oh my goodness, the economy's too strong, to, oh my goodness, maybe the economy's a little weak, which is one of the reasons why I think the market's been a little range-bound recently. So anyway, with that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great week, and I look forward to talking to you again soon.